Okay, good morning, everybody. Just whilst people are joining, so welcome back. This is Customer Community Live 2024, first one of the year. And I'm joined today by Austin Wilkinson, Morag Matthews, and I've also got Sasha Permser here to help with any questions that you've got towards the end of the session. So we've got quite a few people in already. So what I shall do is I shall hand over. So Austin, Morag, did you just want to do a quick intro for those of us who don't know you?
Okay, I'm Austin Wilkinson. I think I did a couple of the custom community lives last year, so you may have seen me on there, or you may have seen me in real life. I'm from the professional services team as a consultant, and today I'm going to be talking about the tax return bundle.
Hello, I'm Morag Matthews, and I'm also one of the professional services team. I'm the tax product specialist, so I deal with corporation tax, personal tax today, obviously, capital gains tax, and various other things, including one-click. I've been with Wolters Kluwer for 6 years, and before that, I was in tax practice for over 25 years. So I'm familiar with all the challenges you've got, especially with changes in tax legislation and how that impacts on the software. And today I'll be talking about basis period reform. Okay, right. Well, I'll start off by sharing my screen. So the latest version of our personal tax software, 2024.1, is obviously out and has been since just shortly after the 5th of April. For those of you that haven't uploaded it yet, please do, because some of the changes are obviously relevant for your 24 tax returns. And in particular, this year, we've had to manage the tax legislation changes relating to basis period reform. I'm going to refer to it as BPR to stop me having to say basis period reform several times. As I'm sure you all know, BPR relates to profits of unincorporated businesses and how those profits are calculated and charged to income tax. Now, this is the biggest change in tax legislation since self-assessment back in 96, 97. I remember those changes. I'm old enough to remember them, and the difficulties we had getting used to them. Basis period reform is slightly easier to take on. It has got some strange parts to it, but in terms of the 2023-4 tax year, that's the transitional year, and that's where most of the changes happen. And then going forward from 6th of April 24, we started the new tax year, and that new basis of assessment is taxed on profits arising. So it's in each tax year, regardless of the accounting period that your clients draw their accounts up to. So BPR relates to individual sole traders, partnerships in terms of the individual partners, and possibly it might impact on some of your trusts, because if they've got a trade within the trust, they'll be impacted on that. It doesn't apply to any companies, so it's purely within the personal tax area. So it replaces, as I say, the current year basis of assessment, which used to assess profits on the period of account ending in a particular tax year. So you can see on my screen, I've got an example, Mr. Alan Baxter. If I go into last year's tax return, which you should have all have completed these, obviously, and into business tax and into the business, you'll see we've got the accounting period from November to October 22. The basis period is listed here. And then what I've done is I've added the overlap relief. And this actually goes back to 96.7 when we changed the basis for self-assessment. So a lot of you might have had trouble obtaining the overlap relief details from HMRC, but your clients may have already provided it. It may have been carried forward each year. So if I just save and close there, that is a normal 22-23 tax return. So you can see the tax and national insurance all on the tax computation. Some of you will have discussed with your clients and perhaps advised them to change their accounting period to either 5th of April or 31st of March. And my example is basically assuming that this client hasn't done that. There may have been a reason why he wanted to keep his October year end. And that could possibly be because seasonal profits or just didn't want to have the opportunity to change. So if I now go into the 24 tax year, we'll see what the differences are. So into business tax again, and into Baxter & Co. And you'll see my accounting period now, because I'm in the transitional year, I've got 22 to 23 October 23, as you would expect. So I would go into that accounting period and put in my normal profits in the same way as we've always done. And then I've also created the following year, which looks a bit odd, ending in 24 in a 23-24 tax return, but that is correct. So I've added both sets of accounts, and you'll appreciate that in terms of adding the data, you may have to estimate these if you don't have the accounts finalised at the period that you produce the return. So now, instead of what we had last year, if I just click back to last year, let's go into where it says assessable periods. If I click back into 23, we had basis periods before. And where we've got overlap relief available in the 24 software, we've now got transition profits memo. So you'll all be aware that the standard profits are the profits for the year that we would be assessing. So you can see I've got £125,000 here, and that relates to the year ended 31st October 23. And then we need to calculate the transitional profits, which will run from November 23 round to 31st of March or 5th of April 24. And this is where this bit of the software allows us to do that. So if I go into the transitional profits memo, you can see it's actually showing me the basis period from November 22 right round until 5th of April 24. And my profit that's included in 23-24 is the 125. Now, those were the profits achieved to the year ended 31st of October 23. We've brought the overlap relief profit forward. So we know that that has to be deducted this year, because in terms of BPR legislation, if you don't use your overlap relief profit in the transitional year, you've lost it. So there's no way of recovering that later, as I understand it. So we've got the net profit for the standard profits, and then the system, which works on all the steps listed here in accordance with the legislation that HMRC have produced. Same way as they calculate it, we've got the profit for the transition part. Now, how was that calculated? I'll just go back to the first screen. We've got £140,000 worth of profits. We've got a assessable period of 522. But when I go into profits memo, the proportion of the profits from 1st November 23 to 5th of April 24 over 366, because it's a leap year in 2024, works out to be £60,055. So that's a proportion of the 140,000 we saw on the screen below. So that figure, we take off the overlap relief brought forward, and we've now got our transitional profit sitting there. And as you know, your clients can choose to spread that transitional profit over 5 years. So we're working on that result here. And in box 73.3, we're showing the amount of that profit that we're bringing into the 23-4 tax year. Now, you can see here we've got an additional line that says we can accelerate those profits. And we just click into this box. If the client decides they want to be assessed on more of those transition profits this year, they can, or they can allow them all, as in this example, to be carried forward. Now, if you do need to make other adjustments on this screen, we can tick this box that says lock accounts, and that allows you to make adjustments here. It makes these white cells become live. But generally, you won't need to do that if you've got a fairly standard accounting period. You'll also notice that tick here to use the SA 103S short form is greyed out. And the reason for that is because obviously with transitional profits or transition profits, you have to fill in the full pages for self-assessment. So that's just for this year. So I've got my total taxable profits here, and I'm spreading a proportion of them. So if I save and close now and have a look at the tax computation, whoops, let's just get rid of 23. So here's the, let me close these down so we can just see 24. So we've got our standard profits. And then as we scroll down, we've got our tax on the transition profit of 6,000. Now, the reason for that, obviously, is these profits stand alone. They don't form part of the general profits. They do for certain things and not for others. So they don't apply, for example, for things like the higher child benefit charge, but they will apply for things like net relevant earnings for pension contributions. So that's how it's shown separately. And then the tax is just calculated as normal. So if I go back into Alan Baxter's main record and roll forward to 2025, that will copy my tax return. And you'll see if I go into business tax and into the business, we've now got an adjustment to the profits that were used previously, because obviously some of them have been taxed in the transitional year. And you can see it's brought forward the transition part. And if I go into 2025 transition memo, you can see it's now reduced this bit, and this is the bit that's going to be carried forward to the following year. If I just click on back for a moment, you'll notice that now I'm in 2025, I've got this note that says to calculate the adjustments, please enter the next accounting period. Now that would have appeared on the previous return before I created the additional accounting period as well. So you are prompted to add the new accounting period. And obviously in this instance, it's going to be from 1st of November 24 to October 25. So I'm just going to close that down and go back into the previous year. There we are. If I go into business tax and into the business again, there is also on this first screen a tab here under business details. And you'll notice that there is a box here that says apply late accounting rules. So what happens there is it's a new tick box that applies the late accounting period rules. And that basically means that if you've got someone that's got an awkward year end, as I call it, between 31st of March and the 5th of April, so it's not very likely, but I did speak to somebody this week that did have one like that. The year end was 2nd of April. Ticking this box stops the system apportioning the figures. So you're basically not changing the figures, and it will be viewed as though it was the 5th of April. Now you can disapply it by unticking the box, but then you're prompted to include an election to disapply. So if we leave it ticked, we're just automatically disapplying. So if you do disapply it, that election is irrevocable, and so that box will stay grayed out for 4 years. So I'll just go back once more. So in our tax calculation for 24, as I say, that's the transitional year. Going forward, it will obviously be profits are rising in the tax year. And in our webinar that we're going to be delivering on the 7th of June, I will go into a lot more detail and also show several examples with people with different year ends, what happens if you have an extended accounting period or one 12-month period and a short period, what happens with losses and so on, so that you can see how you can put them into the system to make sure that you come up with the correct calculation. So that's really just an overview of the basis period reform rules and a little example just to give you an idea of how that's going to be used going forward for 23-24. I hope that helps. I'll pass over to Austin now, if I may.
We have two questions, Morag.
Okay.
Yep. So the first question is, will you be able to spread the transitional profits however you want over the 5-year period? So for example, would you be able to assess all of the remaining profits in year 2 if there was a reduced profits in that year?
As I understand it, provided you assess at least 20% in 23-24, you can accelerate the profits in any way you like. So if you wanted to put more in 23-24, you can, and then in 24-25, you could use it to your advantage. So obviously, if you've got a lesser profit share in that year, it would be tax advantageous to do that. Obviously, I can't give you tax advice. Please check with the legislation that is correct, but that's the basis of my understanding of it.
We have 2 more questions.
Okay.
So we can't just do a long set of accounts from the 1st of November 2023 to the 5th of April 2024. We need to have two separate sets of accounts entered on CCH for each period.
Right. That's correct. So, well, if you can either have an extended period of account, you can go over the 18 months that traditionally we're not allowed to do that in terms of the tax rules, but you can for the transitional year. Those rules are disapplied just for that year. So you've got two alternatives. You can have an extended period and bring all the data in, if you're doing it on accounts production, for example, or you can have two short periods and then you just do exactly the same as you would normally, because you just set up the accounting period for each year within business tax and transfer the data across. I hope that answers that one. If not, let me know and I can give you some more detail on it.
Okay, and then the final one, can you spread profits over the 5-year period if you change the accounting date to the 31st of March?
That's a very good question. And I'll need to check that one actually, because I think the answer is yes to that, because you're still going to have transitional profits. So although you're changing accounting date, you're still falling in with the same rules. I'm just thinking off the top of my head. So you've got your standard profits. I think the answer would be obviously if you end up with some transition profits, because the fact that you've changed accounting date, you are accelerating those profits. So the proportion that relates to transition profit should be able to be spread. But again, that's really tax advice. I would check the legislation just to make sure. But again, that's my understanding.
Okay, we have another question. Is there any chance that the calculation of tax charge on the transitional profits can be made available as an option under the drop-down on SA 302? Clients are going to want to see how it is calculated.
So could you read that again, please, Sasha?
Yeah, of course.
Just the first part.
Yeah. So is there any chance that the calculation of tax charge on the transitional profits can be made available as an option under the drop-down on SA 302?
Thank you. So for those that don't know about the reports that sit under the tax return, where it says SA 302, I will try and share my screen again and show you this. Let's hope it will work very quickly. If not, I'll talk you through it. Let me know if you can see my screen. Is it still not showing? Try that again. Share.
I can see your desktop. Oh, there we go. That's it.
You can see it. Right. So what the person is referring to, sorry, I didn't catch their name. SA 302 has a drop down, and what we're asking for is how the transitional tax on this particular profit here, where we are, how is that worked out? I don't think there's any plans to do that at the moment, but we'll take that feedback. Obviously, I would recommend giving the client a copy of the tax computation so that they can follow it through. But yeah, I like that idea, and I will mention it and see if we can see about including something in there. I have to say it's unlikely, because this change is only really happening in the transitional year. So going forward, you're not really going to need to know, well, I suppose it will be shown on each year going forward. So I'll make the suggestion. Thank you. Any other questions?
Yep, there's an added point. The problem is it shows PA up to the top, even if they are then not entitled to them, including transitional profits.
It shows PA at the top, even if they're not entitled to them. Personal allowances?
I'm presuming that's personal allowance.
Right. It might just be my particular example. I'd need to have a look at that tax calculation and just see whether that's coming through correctly. If you've got an example of that in your own system of one of your clients, perhaps you could anonymize it and send me that, and I can have a good look at it and see whether the calculation is coming through correctly, rather than trying to do one. I'm conscious of time, that's all. So please do send that detail in and I'll have a look and see if it's working out correctly.
Okay,
We
we also
haven't had any other points mentioned like that from people that have been using it so far. So we'll see. Thank you.
there's an added point, Morag, sorry. Assuming the transitional profit would be charged for national insurance contributions as normal.
I believe it is, yes. Is there anyone else on the call? You're all tax advisors, presumably. I don't want to give tax advice, but that's my understanding. The national insurance part, it's going to be accessible for both income tax and national insurance, as far as I'm concerned. Someone in the chat's put yes. I'm not sure if that's the answer to this question or an earlier one, but as I say, that's my understanding as well.
Okay, that's it, Morag.
Okay, thank you very much. I'll hand over to Austin now, who's going to talk to you about the tax return bundle. Thank you.
Okay, thank you very much, Morag. That was really interesting. And actually, I've just made some notes to connect it with the bundle that I was just thinking where somebody was talking about the SA 302 and expanding the computation. I was actually just sort of thinking out loud about whether we can get that into the bundle letters as well, that figure. I don't know the answer. Having said that, I'm probably going to go away and do a bit of research because there might be some sort of changes needed in the letter paragraphs. Okay, yes. So tax return bundle. First of all, I'm going to give you a quick introduction to the bundle. Many of you will know what it is and may have seen a demo before, but I'll then do a quick demo just to give you the context of what we're talking about. Then I'm going to talk about the component parts of the bundle, what makes it work, and then finally your next steps if you want to explore the bundle, what you need to do to get started, really. So I will start with an introduction, and I'm going to start by sharing my screen. So just bear with me a second. If Morag or Steph or Sasha could confirm that you can see my screen.
We can see your screen.
Okay. So what is the tax return bundle? If you don't know what it is, I'm going into a personal tax return, and typically in your normal process, you would go into online filing, generate the IR mark, and then after you've generated the IR mark, you'd go into client documents, and in here you would choose whatever you want to include in the PDF you're going to send to the client, and then you would either click view or print or some other function here like send it by email or whatever, but you would also then have to create a covering letter or email or whatever it might be, but you would have to go through and choose what's going to go in that PDF. What the bundle does, it pulls together a lot of those component parts. So I'll just cancel and come out of there. I will instead go to this button on the ribbon bar that says tax return bundle. And with a lot of assumptions here, assuming you've created the perfect bundle with the perfect letter, all you need to do is click that button that says create bundle, and that will do all of that for you. First of all, the big one, the one we'll talk about probably more than anything else, is this letter. So we'll come back to that later. So this is a sample of a letter, and there's also then the same stuff that you would have got from the client documents, the tax return, the backing schedules, the computations, and so on. So that's what the bundle does at its simplest. You'll also notice up on my ribbon bar, I've got a couple of buttons that are grayed out because the system I'm using at the moment doesn't have one click or document management. But if you are using one click, you can go from here and click publish to one click, and it just puts a document for approval and a message that you can either use a template or just to say, please see attached or whatever in one click. So you can publish it really quickly from here, or you can publish it to document management. So it just puts it into the document center ready for you to do whatever you're going to do with it. So that is the simplest way of using the bundle. There's a lot of nuance around this for very obvious reasons. The great thing about the bundle is it is built into your system. It's not licensed separately. So it's actually in your system right now. It's part of personal tax. All you need to do is make it work. You need to do one or two things, and we'll talk about those component parts in a little while. So, but it is all there. It's all physically there. The other thing I just mentioned about the bundle, again, slight differences from using the client documents. The defaults of what's included, what's not included, can be set at system level. So you can, for your staff don't have to keep ticking boxes every time they go through to include, for example, the return declaration. You can just set those defaults. You can also include standard documents like a terms and conditions document or anything else, so that's just automatically included. So there's less work for the day-to-day staff when they're actually producing the bundle. So it all just defaults. I'm going to show you, as part of the demo, I'm just going to show you some different options around the bundle, particularly around the letter, because the letter is probably the thing you will spend more time thinking about than anything else. The way the letter works is there's an area in the system where you will build what you see as your standard letter, and as I'm sure many of you who've worked in multiple practices will know, people's idea of what that letter looks like can be very different. So I've got an example that I'm showing you. Yours might not look like that, or it might look similar to that or whatever, but just to sort of caveat that, this is just an example. If I want to tailor that, so coming back to the user experience, if I want to tailor that letter, so I'm probably the preparer of the tax return, or I might be the reviewer, depending on how your practice works. I can go into this button here that says letter paragraphs. And what this shows me is the paragraphs that it's selected. And if at any time I can go up to this button at the top where it says preview, and it will show me what that letter looks like, because I'm not looking at it in Word. I'm looking at it as a PDF or in the bundle engine, if you like, or the letter engine. So I can keep previewing. So I can, for example, I can see I've got a page throw issue here that it's just slightly too long for the page as an immediate thing. If I go back to Central, here, and this is all subject to how you design the letter, you can either have this locked down, so some of our bigger firms will just have this kind of locked, so it always produces the perfect letter, but nobody can edit it. But you can go to the other extreme where people can edit everything. So I can, for example, if I click on that second line at the top here, which says, please find enclosed your tax return for your approval, I can just click and type in here if I want to add something in there. So if I do that, and then again, if I put in substantial text, that might change the page throw and so on. So you can see here my complete lack of punctuation, but I've got it in here. There's the bit that I've just added. So as a user, subject to how you set the system up, you can edit the paragraphs, and you may be able to edit some of the paragraphs and not others. So for example, this one at the top, you'll notice the delete button's grayed out, and I can't actually edit it down here. I can't type anything. So again, this is all part of the design, and you have to do a bit of thinking about what you want people to be able to do. You can also have paragraphs that are included from a pick list. So on the ribbon bar, again, there's a button here that says paragraphs. If I click on there, I've got a preset paragraph that says, I've taken this opportunity to enclose your bill. All I need to do is click insert, and that's now in there. Again, I mean, I probably wouldn't keep previewing it quite as often as this, but I can do that at any time. And if I go down to where that is, you can see that paragraph is now included. And again, in my system, I've also got in my paragraphs, I've got one just called page break, which is quite a nice little trick, because you can add that in and then move it around so I can decide where the page is going to break, because at the moment it's got a bit of a problem here. So I'm on this paragraph called page break. If I click move down, so I'll put it just underneath the computation table. Ooh, that's too far. Let's just go up a couple. So just above action required. Again, I can click preview and then see what that looks like. So there's my computation table, and then action required goes on to the next page and so on. So that's how a user can use it. They can also insert their completely arbitrary paragraph, so they can add their own completely custom paragraph wherever they want, subject to how you set it up. One thing I would mention, and this is if you're going down the route of designing the bundle, before you do that, I would strongly recommend an e-learning course that we've got called Tax Return Bundle. So you'll all be familiar with our e-learning, I'm sure. There is one in there called Tax Return Bundle. It is just about the user experience. It's about what I'm doing now, so how you actually use it. So before you design the bundle, it's good to just have the context of how people are going to interact with it. And again, you may have decisions depending on how your firm works, of how much they can control things and so on. So I really recommend looking at that. It's really good to give you all the context of it. So you'll notice, again, historically, if you don't use the bundle, you'd have been doing this in Word, and a lot of people, their gut reaction is they just want to edit it in Word. That is physically possible, but it causes additional problems because it means you've separated that out of the bundles. You've then got to get it back in and so on. So for a short learning curve, I think it's better if people do it like this. You also get an audit trail. So you can see here, if I was the reviewer, so I'm going to do save and close. So imagine that was the preparer getting the letter ready for me. I'm now the reviewer. I come in here, I can see there's a little icon there. And when I click on here, I can see where things have been changed. So I can easily review what's happened. And ultimately, if I need to, I can click this button up here that resets it all back to how it was before. So unlike Word, where somebody could cut and paste or copy some figures in or type something in, you kind of, it's tracked effectively. So it gives you a little bit more control, and it's a better outcome as well, because at the end of the day, somebody clicks create bundle and it's all there, and they don't have to try and collate it in there. Just for context, I'm going to reset it. But what I'm also going to do, so this is back to how it was when we first started. I'm also, as I said before, this is a sample letter. It's something that we've designed over the years, which works in different contexts as well, because the client we're using here is just a sort of standard payments on account, balancing payments on account for next year. But of course, you've got to cater for things like when there's a repayment due, when there's a repayment that's set against next year's payment on account, a PAYE coding, so an underpayment that's coded out next year or in a later year. So you've got to be able to cater for all of those things. And just to, I'll just give you a different example. So I'll pick a different client. So these are just my test cases in here. This one, I think, is a repayment. So I'm going to go into the tax return bundle. So this is the same design of letter, but it's just going to react differently because of the way it's been designed. And I'll show you where that's done later on. So you can see here, it's broadly the same layout, but I've got the tax repayable there shown, and there's no payments on account for the following year. And then just to give you a third example, if I pick this one here, and this one is, I think, I should have checked the computation really, but this is where I think there's a repayment that's going to be set against next year's payment on account, first payment on account. Yeah, so I've got an overpayment of £14, but that's being set against next year's payment on account. So I've designed it so it just reacts to whatever the computation situation is and gives you the perfect letter every time. That's the idea. And again, just for context, I'll go back to my first case in here. So back to our fairly routine one. I'm just going to make a tweak to it. So I'm going to show you a different style of letter. So because you might be looking at that and saying, ours doesn't look anything like that. So I've got another style built into my system where it's more paragraphy, more wordy. So if I go back to my client here, and I'm going to go into the letter paragraphs. So this is the same client that I showed you before. This is a different style of letter, or a different style of the computation part of the letter. So this is more wordy. It's the same numbers, but it's just written in a different way. So just give you some idea of different ways you can make this look. So ultimately, you've got to do, particularly around the letter, you've got to do quite a lot of thinking and a lot of possibly discussions in your organization about how consistent everybody is as well, because some organizations, everybody's very good at using the same templates and so on, but sometimes I've visited people who have different styles. Different people have different styles, and maybe this is an opportunity to rationalize that. But that, again, that needs to be discussed, really. I'm going to go on to looking at the component parts of it. So how do you get started with the bundle? As I said before, it's built into the system. It's all there for you. You've got to do some work to actually make it happen. There are three main areas where you need to go to look at this. There are others as well. It does also use potentially general central fields like the responsibilities, possibly the extra fields, and configuration keys. So it can expand, the whole conversation can expand into other bits of central. But the main component parts are, if I go to File and Maintenance and Tax Settings, in here, there's two options under Personal Tax, under Tax Return Bundle. So there's the bundle details, and this is where you set up the actual bundles themselves. Some of you may only have one bundle in there. This is just a label. It's named as an office, but it could be for a completely different reason. It could be standard. You could have different bundles for different types of clients. If you have a premium bundle with more information in the letter, or less in the letter, depending how you feel about that. But this is just a label. I just type that in. I could, if I wanted to, correlate it to a geographical office. So if I go to this column that says office and picked Guildford from there, what would actually happen is that when I go into a Guildford client to create the bundle, it will automatically pick up that particular style. But if I leave those blank, people, whenever they create a bundle, they can choose which one it is. So again, it could be for different reasons. It could be because you've got a different header or footer in the main template, and so on. There's many reasons, but many of you will just have one called Tax Return Bundle, or whatever you want to call it. In those particular bundles, I can then say what is included. So this is coming back to that starting point where you're selecting what computations are included, backing schedules, and so on. You can set up the defaults here, so your users don't have to keep choosing and possibly choose the wrong thing, and so on. So everybody just works to a standard. They can still override them if they need to, and this is where. So I've got an example of terms and conditions document that automatically gets attached. And if I scroll down, we'll talk about this in a second. This all points to what I sometimes refer to as a shell template. So there is basically a word mail merge template in the system, which uses in the background. I'll just show you in a minute. So that's setting up the bundles in the first place. I'm going to go to the shell template next. So the easiest way to see this is, and again, I think a lot of you will be familiar with this. This is a central mail. I'm just using central mail merge here, which has been in central forever. So this is the standard mail merge engine, and it's just another template like all these other ones. So it's a .x file. You can see I've actually got two down here for my different bundles. One of them's got an appendix on it. I don't know if you noticed. You might have seen it briefly in the letter, and the other one hasn't. That's the main difference between them. But this is just a Word template. I'm just going to right click and do edit template so you can see it. So it's very simple, actually. This is probably simpler than most of your other templates. If you've already got Word templates in here, you can copy one of these and then reuse it. But many of the fields are the same. There are some special fields, having said that, the ones that start with CPG. So we've got CPG issue date, CPG letter paragraphs, and that's the big one. So that is the sort of just a single field, but basically that pulls in all the paragraphs that we've designed in the section that I'm going to show you in about 30 seconds. And so this shell template, you'll have your header in here, it'll have the name and address of the client and the sign off as well. So that's what this is all about. And in this case, because it's the one with the appendix, I've got a page throw with another field in there as well. But it's relatively straightforward. And as I say, designing it is very much the same as when you create your normal mail merge templates. So the third part is back to the menu, back to File, Maintenance, Tax Settings, Personal Tax. And I'm going to go to letter paragraph. So this is the engine of what goes in that letter. And this is where things are slightly more how can I describe it? I'll describe this as non-trivial. You need to do quite a lot of thinking about this, about what you actually want, and that can be quite hard because over time people just organically learn how to do things and they don't remember how much they've actually learned about what you do and don't do in this letter. So this is where all the paragraphs live, and there's a variety of different paragraphs in here. There'll be ones that just get included in the letter automatically. You'd also put paragraphs in here that can be selected from that pick list that we saw earlier. And there are ones that automatically get included. For example, in the computation that I showed you, it's a modular table effectively. So each line in the table, there is an evaluation to say, do I need this line in the table or shall I put this one in instead? This is the bit that you'll probably spend a lot of time over. But that's where it lives. That's where it all is in the system. So those are the component parts. So I'm now just going to talk about how to get started, really. There's a number of ways. Obviously, you can just dive in and have a go and see what happens. Some people have built their own bundles and they've organically changed them over time when they've sort of found restrictions on what they've done. It's probably relatively straightforward to set one up for a standard case that might be 80% of your clients, and some people go down the route of doing that and then people editing it if it's different. But again, you're losing some of the benefits of the bundle. The perfect outcome is if you know that computation is going to be right every time. So that's the first option, the DIY option. Then as it happens, next Friday we're doing a chargeable webinar on the tax return bundle. So there'll be a bit more information in there about how you can design those paragraphs and so on. So that's an option, and that's next Friday. And then also we do a lot of consultancy on the tax return bundle as well. So typically, if you want us to help you design your bundle, get it set up as your practice needs it, we would take a day's consultancy. So that's 2 sessions, and that will get you to a point of your bundle, your letter being substantially complete. I say substantially because even if everything seems to be right and sense checked, you probably need to test it, because you can smoke out things that you've been doing that you've kind of forgotten that you do automatically. So it's always worth going into a testing phase after that. And also, it depends how complex your requirements are. So I've seen letters that are just a few paragraphs and several pages as well. So people have different requirements. So that's why I say substantially complete. But the consultancy is available, tax return bundle consultancy. So that's a quick tour around seeing what the bundle is and looking at how you can get started, where all the component parts are. And I hope that's been helpful. Have we got any questions? I think Sasha's just gone. Are you going to handle this, Steph?
Yeah.
Thank you.
So I'm taking over as your glamorous assistant. So we've got a few questions, and we'll see if we can answer them. So Neville's asked, what plans are there to allow the addition of additional section breaks in the transmittal letter?
An additional section break. Oh, I see. So you've got like 2 appendices, so 2 page throws.
Assuming that's what it means.
Assuming that's what you mean, I've no idea. I'm not aware of that. I don't know the answer to that.
Okay, maybe we can take that one offline and see if we can find an answer elsewhere. So
because one thing you could possibly do, and maybe you've tried this, I don't know, but you could put a second page break as one of the paragraphs that you can select from the list, so you can have more than one of those. Whether that would work for you, I don't know, because it kind of depends how you want to use that. If you want it always as a second appendix. Yeah.
Okay. Mark asked, will there ever be something similar for corporation tax? He said it's brilliant for personal tax, but they'd love to have it for corporation as well.
Again, this is good, isn't it? 2 questions. I have no idea. I don't know. I'm not aware of any plans. And actually, that does mention that there's something else that I probably need to say. This only works for individuals, so it doesn't do anything for partnerships or trusts. It's just for individuals. And as far as I know, that's the current plans. There are no plans to expand that.
Okay, so, well, maybe something to take to our product team as a
absolutely. Yeah.
Neville's actually come back and said they'd want more section breaks to allow for greater design control of the template. So that's just an answer to his previous question.
Okay, yeah. We probably need to have a very big conversation about that, because we should try and work out how, because sometimes when you want something like that, sometimes there's a different way of achieving it. And I don't know whether there is or not in this case, but this could take us in many directions.
Okay, so Cam has asked on accounts production one, they've got two questions: how to show the full name of client instead of initials, and two, how to change their office address.
The full name of the client instead of their initials in the letter.
I'm assuming
is that? I assume that's in the letter. So when I'm in a client, again, I'll just go to this client here. If I go to the central record and click the ellipsis button, typically the one that we would use is this mailing name here, the one that we'd use in the mail merge. So this can be whatever you want it to be. I can just type in there. So I can type over the top of that. So if I've got a title or anything like that, and that's what we would bring into the mail merge field, as you would with any mail merge document. So definitely you can do that. If that's the answer to the question.
Yeah, the second part of that was how to change their office address.
The office address, that's the central record for the office. It depends where you're using the office address, because there'll be a contact record, and I mean that's just should be a contact. I don't think I've got one in mind, but your office address will be a contact in your database. I'm struggling to understand what the significance of that is for the bundle, unless you mean in the header and footer.
Yeah, Cam, if you want to add any more to your question, and if you want to pop that in, and then
yeah.
So Fozzie has asked, do you need to specify the start and end of the tax year on the letter paragraphs, or will it be default to the new tax year?
If you don't put any dates in there, it just does it for any year. So if you've got a generic paragraph, which most of mine are, you just leave those blank, the start and end date. So you put in the start and end date if you want a paragraph to only appear for a particular period of time. So for example, following Morag's discussion this morning about basis period reform, you might want to put a paragraph in about basis period reform for the 2004 returns, in which case you put an end date on it. So if somebody does a tax return bundle for an earlier year or in the future, they won't get that paragraph.
Okay, and we've just got one more from Alistair. He's asking, what is the benefit of the section break over just a page break paragraph? At our firm, we just have multiple page break paragraphs that users can add.
So that almost takes us back to the first question. There are different ways of achieving things. I think the page break, the users can add them as they go, so they've got control over it. I suppose the using a section break in the template means that the firm can enforce it a bit more, possibly. But I'm not sure that there is much difference. I think it's probably more to do with behavior and how much effort you want people to have to make to actually do it, or what they need. You know, if they've got very variable clients where they have a lot more flexibility.
Yeah. Cam has actually come back and said, but how to link our new address with our contact, which has been changed, if that makes more sense.
Okay, so I'll pick a contact record. I don't think I've got anything that looks anything like an office in here, but if I just pick, I mean, this is be an employer, so I don't think it really matters what it is, but it's a contact. So your office will be in here as a contact, and there'll be an address in here. So if you're in this tab, if you double click, this takes you to the address maintenance. And then you can either search if the address is already in there, or you can type a new one here. And then once you've done that, you click this link button at the top. So that will link the address that you've just entered to that office or whichever contact you're in.
Great.
I hope that answers the question.
Yeah, well, that's all of the questions, and we're out of time. We're a little bit over, actually. So thanks to everybody for sticking with us. Thank you very much for attending. So we're going to leave it there, and I just wanted to pop the dates on the screen for our upcoming training that Morag and Austin have already mentioned. So hopefully you can see those on my screen. So Austin's doing a follow-up session on the tax return bundle next week, Friday. If you want to book onto that, I will send you the link to register. And similarly for Morag's session on Friday, the 7th of June, where she'll be going into more detail on the basis period reform. So I will make sure you all get the links to those. But for now, thank you very much to Morag and to Austin for hosting and sharing that content. Thank you for joining us. We'll share the recording yeah, we'll be in touch about any follow-up sessions that we've got for Customer Community Live, so stay tuned. So thank you very much. Happy Friday. Have a great long weekend.